Would you trust $210 million to a 30-year-old gaming nerd who was playing League of Legends on your multi-million-dollar business call? Nope, not even a little bit. That's what happened with Sam Bankman-Fried in one of the many deals he made with FTX. Let's take a look at the rise and fall of FTX. Sam Bankman-Fried is the main character of this story. Like every other person on the planet, he wanted to find a get-rich-quick scheme, and what a better place for those fantasies to be achieved than the world of crypto. He claims to be an altruist and that he had plans to donate almost all of his profits, leaving him with just a $100,000 per year salary. But at one point, he was worth $26 billion. FTX is a crypto exchange platform that granted people low trading fees and housed several different types of coins for crypto traders to invest in. The big feature was that FTX allowed people to trade cash as collateral for the coins. This was all motivated by a noticeable difference that Sam had discovered between different exchanges and their coin worth. FTX also created its own in-house token, FTT, that will become incredibly important when we eventually discuss the collapse of this major crypto king. Before FTX, there was Alameda Research, which is a crypto trading firm Sam founded in Berkeley, California, and Sam also appointed one of his friends as the CEO. Alameda Research was ran by a bunch of Sam's colleagues, and there are reports from previous FTX employees that they acted really like a clique. Alameda Research and FTX offices are both located in the Bahamas, very close to one another. Now, real quick, you may be asking yourself, what is the difference between FTX, a crypto exchange platform, and Alameda Research, a crypto trading firm? A crypto firm is a firm or broker that acts as an intermediary between the cryptocurrency markets to facilitate the buying and selling of crypto. A crypto exchange is an online platform for buyers and sellers to trade crypto with each other based on current market prices. Essentially, a firm involves a middleman who works out the deals, and an exchange is the wild, wild west, where buyers and sellers trade directly with one another. Investors from all over were taken by Sam's salesmanship and confidence in his ability to navigate the crypto world. Large investors, such as Tiger Global and BlackRock, were very tied up with Sam and FTX. In early 2022, Forbes estimated FTX and their investors were valued at a combined $40 billion. FTX had their hands in practically every sector of the crypto world. FTX went out not with a whisper, but with a tweet. A tiny little tweet by the CEO of Binance sent a hefty majority of people who held crypto on FTX to try and cash out. And whenever a lot of people try to take a ton of money out of something, that something typically collapses in on itself. Such is the case here. But what makes this situation extra unique is that it was discovered that investor money was being transferred to Alameda Research without the investors' knowledge or consent. So when they all went to jump the FTX ship, there was no money for them to take with them. Things started to get fishy when Sam publicly tweeted that he was moving FTX wallets around and claimed it was something that they do periodically. What he was allegedly doing was moving FTX investor funds to Alameda to keep that company afloat. The amount of funds that was transferred was close to $4 billion. That $4 billion was in the form of FTT, which is the cryptocurrency that Sam and his friends made up. A balance sheet for Alameda Research was eventually leaked, and it showed the $14.6 billion of assets were in FTT. The problem with this is that the coin was made up by Sam, which he could then assign any type of value he wanted to it, and then held very real assets with his very fake cryptocurrency. As the crypto market started to slide with the increase of rates by the feds, his coin became virtually useless. That tweet I mentioned earlier came out after the leaked balance sheet. The CEO of Binance, CZ, tweeted that he was going to be liquidating all of his FTT, which sent a ton of people into a panic. $6 billion was liquidated within 72 hours of that tweet. In November of 2022, Sam announces that FTX and Alameda are filing for Chapter 11 bankruptcy. This announcement sent the entire crypto market plummeting down in price. Almost $150 billion of market value was lost over the top 15 coins. Alameda was tied up with almost 130 other companies that are directly affected by this bankruptcy. Another nail in FTX's coffin is that it is reported that almost $1 to $2 billion of investment funds that were transferred to Alameda is just straight up missing. As of December 23, 2022, Sam Bankman-Fried has been arrested and extradited to the US, and several top executives at Alameda have pleaded guilty to their charges that include money laundering and fraud. Sam was out of police custody on a $250 million bail at the time of this video.